So now, before I share about trading part of it, let me just share with you the wallet management strategy. Now, this is my strategy, okay? You may find your strategy later on, probably when you are really accustomed with the robot, but this is what I call JD's 10, 40, 50 rule, all right? Now, you can follow this rule, and I think this is a fantastic rule to follow, but how does these things work? Let me explain to you. Now, let's say, for example, okay, in my Binance spot wallet, I have my trading fund, which is $1,000, all right? So that is, you can even call that as your capital, okay? But let me just call that as a trading fund, okay? So that is $1,000. So I decided to come in with $1,000, for example. Now, for that $1,000, I will divide into two portions, 50-50. All right, now please take note of this. This is very important. The reason why traders will lose money because they don't have a proper wallet management, or you can call that as a money management. And this is a very important risk management. All right, now 50-50. Now the first 50% here is $500. $500 will then be divided into two portions. 20% of that, which is $100, okay, $100 will actually go for my trading. Now, if I'm going to trade $100, the pair suggestion here will be 5 to 6 pairs. Can you see that? 5 to 6 pairs, which is medium risk. Actually, with $100, I can actually trade about 10 pairs, but I'm not going to go max, because if I go max, that is a high risk. So I don't want to do a high risk. Okay, I want to have some margin available. All right, I will explain to you that very shortly. So if I have $1,000 in my spot wallet, I only allocate 50%, 50-50. From that 50%, I allocate 20% for my trading. And that 20% is just $100 from 500. So I can actually select about 5 to 6 pairs to trade. Now, what happens to the 80% of that 500, which is $400? That will be used for replenishment. So in an event, if the market go against me, the system will automatically replenish. Can you see that? All right. So now, for example, okay, the replenishment strategy, okay, if you want to do, you can do automatic, which is already decided in the parameter, so you don't have to touch. But if you want to do manual, okay, then I have the parameter here. Probably when you see above minus 20% and below minus 5%, this is negative. Okay, market is negative. You can do the manual replenishment if you want to. All right, I will explain to you how to do so very shortly. Okay, just understand how the wallet management actually works, because this is very important. Now, what happens to the remaining 50%? The remaining 50%, the $500, is reserved for critical fund. What do I mean? When I say critical, means when the market is severe correction, okay, the market going down severely. So what happens now? When I say severe, means the market is like below minus 20%. So now you are the king, because you have this 50%. You can go in and ambush the enemy by doing manual replenishment, and you can walk out of this trade victoriously. Can you see that? Now, this is a powerful wallet management strategy. All right, and this is the reason why you can actually be more profitable than anyone. Although the same person is using the robot, but you can be much profitable because you have a proper wallet management. That's all. All right. So now this is important. So if you look into the percentage, okay, it is actually 10%. 10% of your $1,000 goes into the trading, which is $100, and thereafter we have the 40% that actually you hold it for your auto replenishment. Okay, this is auto replenishment by the system. All right, and thereafter you still have another 50% of bullet. Now, when I say trading fund, okay, this is your bullet. All right, now look at it from the war perspective. Okay, now trading is not really technical. I would say it's more a tactical. So I look at trading from the war perspective. So if you are in the battlefield, you can actually die in the battlefield if you don't have enough bullet. Now, if you have enough ammunition, if you have enough bullet, imagine, right? When the enemy actually lose momentum, lose their strength, and they got no bullet, you can run into the enemy's camp, ambush the enemy's camp, because you have the 50% reserve of the bullet, so you can actually go into the enemy's camp and kill everybody and walk out victoriously. Can you see that? Now, if you use all your $1,000 to trade, you are gone. You will be surrendered. Okay, you have to wait for the market to actually revert. So this is so important. So please take note of this wallet management strategy, which is 10, 40, 50 rule. All right. I hope that helps. Okay. Now let's move on. So now let's look into trading order placement. How to actually put your trades, and I will then explain to you some of the formulas and the parameters and so on. Okay, aligning with the wallet management that I've explained earlier. So now for the order placement, right, what you need to do, you tap on quantify. So at the bottom there, okay, you will see quantify. Tap on the quantify. You will then be able to see the list of all the currency pairs. Can you see that? There will be a list, okay, and everything will be paired with USDT. So there will be, okay, these are basically top 50 pairs, okay, top 50 pairs, and you can select any of these pairs. Now, as I mentioned to you, every time you see a red banner in my slide, please understand that those are caution points. All right, what are the caution points here? The wallet management is crucial. First order amount is crucial. Let me explain to you what do I mean by the first order amount here. So the next slide here, it explains to you. Okay, so let's say, for example, okay, I select one of this coin over here. When I select one of this coin, it will then bring me to the next page, and I'll be able to see. Now, this is an example for Monero XLM USDT pair. Now, what you need to do now is to click the transaction setting. All right, click the transaction setting. It will bring you to the next page, and this is where you have the currency trading setting. Now, this is a caution point here. Okay, why? Because your minimum first order amount or your minimum to start is USD $10. Don't change this, please. All right. So if you're only using about, let's say, $100 or $1,000, right, I would advise you to use $10 is a minimum. This is defaulted. All right. Now, how to decide the number of coin selection or the currency pair? So how to decide? Very simple. As I mentioned earlier in the wallet management, right, you allocate 10% of the total trading fund. So trading fund is always in USDT spot wallet in your Binance account. So example, let's say you have $1,000 of USDT in your spot wallet. So 10% of that will be $100. Now, if my first order for each of the pair is $10, so 100 divided by 10, I can actually select how many pairs? 10 pairs. Can you see that? I can do 10 pairs. But in the wallet management, I did mention to you, yes, you can do 10 pairs. But it is always wiser, probably you go for 5 to 6 pairs first before you go for maximum 10 pairs. All right. Now, the remaining 90% of the trading fund, which is $900, is now kept as reserve, whereby you will be using that for the auto replenishment or for the manual replenishment. Can you see? Now you got so much of bullet in order to actually counter the market if the market actually go against you. So this is basically a war strategy, all right? A war strategy, and in this war strategy, wallet management is the most important thing. So now once you have clicked the parameters, right, you'll be able to see over there first order amount is $10, and then you'll be able to see the parameter. These are the parameter. Now, for this parameter, right, I would advise you probably to maintain the setting, or later on you can follow my setting. Okay, I will show you my setting very shortly. So now here we have number of calls. Number of calls, this is defaulted 7. What does 7 mean? Now, when you see 7, you will see at the bottom here there will be 7 calls, which simply means if the market go against your average price, okay, if the market go against your open price and it goes by 3.5%, it will then automatically replenish at first call 2 times over here. This is an example, okay? So if the market go further against you, it will automatically replenish and buy a new order in order to protect your trade so that you don't get liquidated. All right. Now, even if let's say it is auto replenish, and let's say, okay, at level 4, at a fourth call, at the fourth call, you got no more fund left in your Binance. So what happened? Are you at loss? You are not at loss. The robot will actually wait for the market to rebound. And once the market rebounds, the robot will close the trade in profit. Isn't that awesome? So there is no such thing as stop loss or cut loss over here. Okay, please understand that. So now, take profit ratio here is 1.3%, which means every time the robot hit, okay, 1.3% above the average price, it will close in profit. Can you see that? So I will explain this very, very shortly. Okay. Now, if you look, this is the number of calls. Okay, and I would advise you probably to use plan 1. Okay, if you are beginners, novice, use plan 1. Don't go for plan 2 or plan 3 because these are more aggressive trading. And to do more aggressive trading, you need to have huge trading fund, okay, like $10,000 or $20,000 in your trading fund in order for you to go huge. All right, because if you look right under the first call here, first call under plan 1 is 1. 1 means when the market go against you by 3.5%, it will open up 1 time times 1. So 1 times 10, that will be $10. Can you see that? $10. So 3 times 10, that will be $30. 5 times 10, that will be $50. Can you imagine that? So as it goes more and more against you, the market go against the trading, it will open up automatically, and this is what we call replenishment strategy. All right, this is actually a martingale strategy that is already built into the robot, so you don't need to worry about it. Okay, it will be taken care by itself. So now once the setting is already confirmed, okay, you can then click confirm, make sure all the setting is right, and then you can proceed to trading. All right, now let me show you how the martingale quantitative strategy actually works. Okay, now let me just use this parameter here. All right, this is the parameter. I'm going to do a first order 10 USD. Now please watch this very attentively. Okay, this is going to be interesting so that you understand how the robot has been programmed. This is a mathematical quantitative, okay, that already been developed into the robot, and the robot will do this automatically, so you don't have to worry about it. So now let's say, for example, okay, I buy the first trade. The robot execute the first trade at $10, and the robot goes up 1.3%. Can you see that? Take profit ratio is 1.3. So when it reaches 1.3, it will then have an earning callback of 0.3. Can you see earning callback here 0.3? Now when it call back at 0.3, the robot will automatically sell at profit 1%. So 1.3% minus 0.3, that will be 1% profit of your $10. Can you see that? So just imagine, okay, if you have more fund, more trading fund, and if your first order is $100, that will be 1% of $100. If your trading fund is $1,000, that will be how much? That will be 1% of your $1,000 of your first order position. Now, if you want to have higher first order position, you need to have higher trading fund in your Binance wallet. All right, please understand that. So now, this is the first scenario. Okay, first scenario. The market opens, it goes 1.3%, callback 0.3, it closes in profit 1%. The robot will do it automatically. Now, let's say the market opens, okay, the robot execute the trade, it goes all the way up to 5%. And then there is a callback. Sorry, there's a callback here by 0.3. So 5 minus 0.3, now your profit is much greater at 4.7%. Can you see that? 4.7% of your $10. So that is the second scenario. Now let's look into the third scenario. Third scenario, the market, okay, robot execute the trade, but the robot is basically have a callback here. Can you see 0.5%? So instead of going up all the way and take the profit, there is a callback by 0.5 and the market drop. Can you see there's a correction in the market? The market dropped by 3.5%. All right, and then there's a callback 0.5. The robot now will automatically buy. Okay, buy. Can you see at $20 because this is multiplied by 2. So the first call here is multiplied by 2. So 2 times 10, that will be $20. So the robot now will open a new order at $20. But please understand, when the robot opens a new order, Now this order will be added with the earlier buy, which is $10. So there will be a total cumulative of $30 order now sitting at this point. All right, now just imagine if the market go further up, okay, further up all the way to 1.3% from the new average price, the robot then will close the trade and it will then call back 0.3 and it will then sell and take the profit for you at 1% of $30 now. Can you imagine? Now at $30, 1%, your profit is much higher, right? Can you see that? So although the market is going against you, you don't have to worry. Leave it to the robot. Because when the market recovers and goes back to 1.3% and call back, it will then close its profit and now your profit is much greater. All right. Now, the only problem here is what? You have to wait, right? Because the market has dropped. For the market to go up again, it may take some time. But don't worry. Market is always up and down and it is always down and up. Okay, that is the common thing about spot trading. Now, this is third scenario. Now, let's look into the fourth scenario. Now, the fourth scenario, the market further goes down all the way. Okay, can you see? The second call, which is 4%. So 4 plus 3.5, the market goes down all the way by 7.5% from the average price. Now, and thereafter, there is a callback to 0.5. So what happened? It will now buy at 4 times of my first order, which is $40. But now I have a trade, am I right? I have an earlier trade at $30. So it will then add up. So now I will have a cumulative order, which is $70 here. Now, when the market goes up all the way, okay, above the new average price at 1.3% and call back 0.3, now the robot will sell and take profit at 1%. Can you see that? 1% of $70, no longer $10. So now your profit margin is getting much greater, am I right? Although you waited patiently, but now you have a greater profit. So that is the fourth scenario. Now, just imagine, if the market goes back all the way, all right, to the original open price that you opened earlier by 10%, and it calls back 0.3, now look at your profit. That will be 9.7% profit of the $70. Can you just imagine the magnitude of profit that you're going to make? Can you see that? So that is the reason why you can see martingale quantitative strategy is actually a foolproof strategy. All right, that's the reason why there is no liquidation here. So the only consideration here, you need to make sure you have the trading fund in order for this robot to actually replenish. But even let's say at the second call, okay, if you stop, let's say the robot, okay, recognize you don't have enough fund in your Binance account. What the robot will do? Even if the market goes down, the robot will never open up a new order anymore. So the robot will now wait until the price goes up above, okay, above the second call average price, then the robot will close in profit. Can you see that? So that's the beauty about this whole strategy that has been actually mathematically developed into this robot, because this robot is so intelligent, it can actually do this work for all of us. Isn't that amazing, right? Now, let me just quickly show you my trading parameter. Okay, this is my trading parameter. If you want to use this trading parameter, you can use that. Okay, it's up to you. And I am actually doing a lot of experiment. Okay, I'm keep changing my trading parameter because take time. Okay, take time, especially if you are the first week, second week, or even 1 month. Okay, don't worry about profit. Do a lot of experiment and study because you lose nothing after all. Okay, so now after I do a lot of experiment, I came up with my own parameter. So if you want to use this parameter, you can actually take a picture and use it. Okay. But please, okay, your first buy, don't put 20, please. Put 10, because I put 20 because I have a huge capital there for me to trade. All right. If you don't have huge capital, don't put 20, please. Just put $10. Now, and my number of calls is 5. I'm not using 7. Can you see that? And you can see my take profit ratio is the same, 1.3. Earning callback 0.3. My buy callback is 0.5. But look at my first call. I use all 4%. Now 4 times 5, which means total of 20%. So if the market goes all the way down 20%, that is a huge, okay, huge correction, and it is seldom happens. All right. If the market goes by that, I can still actually sustain because I have 5 different calls, and these are my multiple, okay, multiple of the call or multiple buy in ratio. So if you hit my first call, that will be 1 time, 1 times 20, that will be $20. $20 plus 20, that will be $40. Can you see that? And it goes on all the way. Now let me show you how does my martingale strategy actually work. All right, now can see, right? For example, over here, I do my average price. Okay, that is about 1.7. I'm taking Matic here as an example. And my first order, let's say I put $10, just for easy understanding, okay? So at $10, the market goes up 1.3 and it calls back 0.3. It will then sell and take the profit at 1%. Now, if the market go further up by 3%, the callback, sorry, is 0.3, okay, not 0.1. So it will then take profit at 2.9%. Now, if the market, okay, can you see the market goes up by 0.5 and it comes down by 4%. So it will hit my first call. So when it hit my first call, all right, with my first call, and if it goes up all the way to 1.3, all right, now when it hit my first call, there will be always a new average price, okay? And from that average price, it has to go 1.3 and comes down 0.3. It will then take the profit here. Now, this 1% profit is now based on $20. Can you see that? It was based on $20 because when it hit my first anti-cut loss, or I call this as the margin call, it will then buy another $10. So that will be 1, right? 1 times 10, that will be $10. 10 plus the first order, 10, that will be $20. Can you see that? So if it sells, okay, in profit, I'll be profiting from the $20. Now if it's actually further, okay, if it actually further goes up, so instead of going up, it goes at 0.5 and then comes down, okay, by another 4%. So now the cumulative total market is down by 8%. So what will happen now? You can see, all right? It will then buy, okay, it will buy at $30. Can you see that? Because I put my second call, which is 3. So 3 times 10, that will be $30. Now $30 plus the earlier $20, that will be a total floating of $50. Now if the market go above 1.3% and closes, I will then profit at 1% of my $50. Now if this goes on further, right, goes on further and the market goes down further by another 4% and it buys now at my third call, that will be 5. Can you see? 5 times 10, that will be $50. So $50 plus my earlier $50, that will be $100. So that will be $100 floating. So if the market closes now, I will take a profit of the $100. So now, can you see that until level 3, right? I need to make sure I have $100 in my fund, right? In my trading fund, $100. Now, if let's say I don't have $100, I only have $50, what happens? Don't worry. The robot will not be able to do the margin call, but the robot will stop at level 2 and wait for the price to rebound. Once the price actually recovers, the robot will then automatically close the trade for you at 1.3% and take the profit. So there is no losses here, okay? There is no losses, there is no liquidation. What is frustrating is that probably the waiting time, okay? Because you need to wait for the market to actually come back up again. Now, if this goes on further, right, another 4%, that is my fourth call. Can you see my fourth call hit? That is about 11. Can you see? Multiply by 11. So 11 times 10, that will be 110. And earlier I have $100, so that will be $210 floating. And if he hits the profit at 1.3%, I will be taking much greater profit, which is 1% at $210. And finally, if it further goes down by another 4%, that is a total market, okay, down by 20%. Can you see that? So now, what will happen here? It will now buy another 22 times of my first order. So that is a multiply by 22. That will be about 220. And I have an earlier, which is a total of 210. So cumulative of that, that will be $430 actually floating. Can you see that? So if the market closes at about 1.3%, I will profit 1% from 430. Now watch what happened. Let's say, for example, okay, At the level 3, the market actually recovers and go all the way up at the original open price. Now, look at it. It is about 10%. Now, at 10%, okay, at 10%, that will be about 9.9% profit of $100. Isn't that huge? That is about close to $10 profit in just one pair, one trading, right? So just imagine if you have 10 pairs and that 10 pairs is doing 10 transactions per day, what will be the significant profit you're going to see over here? Now, you don't have to worry about this. I'm just explaining so that you have an understanding how does the martingale strategy or the margin call actually works automatically without your intervention. So the robot will be actually doing this job. So you don't have to worry. But this is how the mechanism, okay, of this martingale strategy. All right, now, if you look into the margin call, okay, versus trading fund, okay, you can see from this table, okay, I'll put it very clearly for you. So let's say the number of call is 5. So each of these, okay, first buy will be 10, okay? You don't change that. So the first buy is 10. Now, if you look into the first call, let's say I multiply by 1. So if I multiply by 1, that will be $10. Okay, so 1 times 10, that is $10. Now, I already have the first order, which is $10. And if I would hit my first call, that will be another $10. So what will be my total cumulative order now? $20. Now, if the market goes further down to call 2 and hit my multiple by 3, so that will be $30. Can you see that? So now $30, and earlier I have another $10, right? That is $40. $40. All right, if you plus that $10 earlier, okay, that will be total of $50. Can you see that? So now, if it goes down further to third call, that will be a fifth. That will be multiplied by 5, which is $50. So 50 plus another 50 earlier, that will be $100. And if it goes down to call margin 4, that will be multiplied by 11, that is 110. 110 plus $100, that will be 210. And finally, there will be 430. Can you see that? So now, for me to trade using this strategy, right? And if I want to actually automatically replenish in the event the market is actually going against me, I need about $430 for one pair. Can you see that? Now, if you only have $100, you are going to stop at the third call. Can you see that? At the third call. All right. So you will stop at the third call. So if you stop at the third call, you're going to only use the $100 that is available in your trading fund. All right. Now, if for example, it goes down to fourth call, okay, don't worry about it. Okay, it won't touch your fourth call amount or nothing because you only have $100, right? So the robot will stop at $100 and wait for the market to revert. And thereafter, the robot will close the trade in profit for you. That's all. That's how it works. Okay. Now, this is just to give you an idea. Okay. Based on this, you will know how many calls can you sustain based on your trading fund that is available in Binance. All right. Now, if I bring back, okay, you can see over here. Now, let's say, for example, okay, we open a BTC USD pair over here. Now, the average price is about 36,641. And then you can see the callback trigger. Can you see that? The callback trigger and the take profit trigger. Now, if it hit 35,000, all right, which is basically 4% from the average price. So if the market comes down 4% by the average price and hit 35,175, the first call will be opened up. Can you see that? So that's how it works. Now, so if I put this into a graph, okay, into a chart here, so you can see my average price will be 36,000. And then if the market goes down by 4%, that will be about $35,175. So what happens now, the robot will automatically open a new order, which is called a replenishment, or I call this averaging. Okay, it's actually an averaging concept, but it is done automatically by using a martingale strategy. So if the robot opens that trade, let's say at times 1, okay, can you see multiply by 1, which is $10. Now, if the robot opens at $10, which is the same price as my open price, so what will happen now is that the average price, okay, a new average price now will be 35,908. So what happens to my losses? Instead of minus 4%, now my losses will improve by 50% to minus 2%. So just imagine if the market actually revert at this time, what will happen? I'll be profiting, right? I'll be profiting. So there is only two potential here. One, the market can actually revert in my direction, in my favor, or the market can further go down. So if the market further goes down by another 2%, can you see that? Of 2% from the new average, then it will open up trigger another auto replenishment. Can you see that? So this is how the robot works. So now if you look at this, right, the concept is very simple. The same amount, if you put the same amount, which is if the first order is $10 and you open up another $10, most of the time, right, the new average price will improve by 50%. So this is done by the system. Now just imagine if this first call is times 2, which is $20, what will happen to the average price? It might go up further. All right, it might go up further. Can you see that? So it will come closer to the current price of the market. All right, so this is how basically the auto replenishment works. Now let's quickly look into the manual replenishment. Now for the manual replenishment, okay, manual replenishment, we don't really worry about the trigger price because we're going to manually now manipulate the market. All right, so now let's say, for example, okay, you have an average price and the market actually goes down by 20%. All right, so you allow the robot to do its works first. Okay, that is the reason why, remember, the 40% from the wallet management is for the robot to do the auto replenishment. So the robot do the auto replenishment, but you still have a reserve of another 50% in your wallet management, and now you wait until the market hits, let's say, 15% or minus 20%. So the market comes down all the way. So what do you do now? You now go in and do a manual replenishment. All right, so you do a manual replenishment. So that depends on the amount. So if, let's say, the current amount is $100, so what you need to do, you put the same $100. All right, you do a manual replenishment, you do at $100. So when you put the same amount as the order amount, $100, and you do a manual replenishment 100 order, what happens now? You are manipulating the average price. So the average price will come, but will improve by 50%. And now instead of minus 20%, you are only minus 10%. So now your total order now will be $20. Can you see that? So now if, let's say, right, the market move in your favor and hit 1.3% profit, now you're going to take a 1% profit of $200. Can you just imagine that? So this is how we do the manual replenishment. All right, so that's the reason why, if you look, right, if you look here, there is a replenishment there. All right, this replenishment is a manual replenishment, which I will explain to you later on. Okay, all these buttons function and so on. All right, so that gives you an illustration about the auto replenishment, where you leave it to the system to do it, or to the robot to do it, or you can actually manually interfere. What I call this is ambush. Okay, you are actually manually manipulating the market. So now, instead the market controlling you, now you are controlling the market. All right, please understand. All right, the market goes down, the market has to come up. That is the reason why manual replenishment, if you ask me, the martingale strategy, either the manual or auto, is a powerful strategy. But that also depends on your wallet management. Okay, please understand that. So wallet management strategy is key here. And that is the reason why it is more tactical rather than technical. So we don't have technicality here. We only have to have tacticality, how to win this battlefield by having a proper wallet management in place. So I hope that is clear. Now let me just stop here. Is there any question? I hope that is clear. Is that clear? All right. Any clarification from the team?
So, Dr. John?
Yep.
So the key is must have a lot of capital.
The key is, even if you have a lot of capital, but you don't have a proper wallet management, no point. So you have a lot of capital, yes, with the wallet management and with the number of pairs, okay, you can actually make a lot of profit from this robot.
Okay, thank
All right. But even if I have, let's say, $100,000 in my Binance account, I lose nothing, all right? Because that 100,000 will remain there. It will only be adding up more profit and compounding my capital actually, all right? So that is the assurance that we can have, because all your capital or your trading fund is 100% controlled by you in your spot wallet. All right? Okay. Awesome. Thank you for that question. Any other questions? I hope you all are enjoying the presentation, okay? So this is awesome. Now let's move on quickly. And later on, we will open up again for the questions. Okay, now, let me just quickly show you some of the buttons, okay? Some of those features are in this robot. So now if you look, okay, if you look, you will be able to see one shot. If you click that one shot, you will also be able to see cycle. Now there are two functions here, okay? It's a dual function. You can choose one shot or you can choose cycle. Now, what does this mean? One shot means, okay, you only want this robot to trade this pair only once. So which means this robot open the trade and closes the trade, that is it, finish. All right, so it closes in profit, that is it. It will not open any longer for that pair. Now, cycle means, if you put a cycle means the robot will continuously open the trade and close the trade. Once it closes, it's open again. Once it's closed, it open again. So it will be doing that automatically without your interference. So it's up to you, because sometimes, right, if the pair is not really a volatile, because we need volatility here, okay? If the pair is not really volatile, it's not really active, right? You may not want to proceed to select that pair. You may want to change to another pair. If you want to change to another pair, you might just change. You might just choose one shot and end that pair, and then you can choose another pair to actually trade. All right. So you have an option here, okay, to choose whether one shot or cycle. Now the next feature we have here is the clearance and replenishment. Now, if you are beginners, I will strictly, okay, ask you to avoid using this at the moment. Clearance here means, okay, you are going to manually exit. So if you manually going to clear or liquidate, you are doing it yourself, okay, not the robot. Because by right, there shouldn't be any losses here. So if you decided that you want to manually clear because you think that, wow, this is too long, and I'm willing to take the loss, okay? If you want to do that, you can do a manual clearance, okay? But if my suggestion is don't touch that manual clearance. It's better to use the replenishment, manual replenishment, and actually manipulate the market, okay? Manipulate the market and bring the price closer to the current price so that the market will close by itself. All right, please understand that. Now, if you manually clear, right, it will follow your current price minus your open price. So the losses is not because robot, okay, Royalq doesn't charge you any fine. There is no penalty. There is no fine. What you lost is actually the market price, the difference of the market price. So if you buy Bitcoin at 60,000, you sell at 30,000, your losses is 30,000, right? Which is 50%. So that losses is the same here. All right. So the robot doesn't charge you anything. So there is no penalty. There is no fine here. All right. So, but I would advise you probably don't do that. Okay. Don't do that. Now, replenishment here, I've already shown you the manual replenishment function. If you are a beginner, you may not want to use this yet. Allow the robot to do it automatically. All right, but if you are a beginner, you are already understanding how to go about it, and you have enough reserve, okay, in your fund. So don't worry about it. You can then go and do the manual replenishment. Now, when you do manual replenishment, okay, sometimes you can have so many pairs in the rate, right? Don't go and do everything. Look for the smallest loss, okay? Look for the probably the smallest amount order first, okay? Order amount. You can see over here, okay, the order amount. Look for the smaller order amount and close one by one. You close one, then you do the next. You close one, then you do the next. All right, that's important. Now, then you have the startup here. Okay, startup is basically once you confirm the parameters and so on, you confirm, the robot will be then running for you automatically. Then at the top here, we have the log and the transaction record. Now, each of the pairs, okay, all the transaction, the order time, the order number, order limit, quantity, turnover can be viewed here. Now, these are integrated directly with Binance. So the data that you see here is actually the data from Binance, right? So how do you get this information? How does this information integrated? So if we go to Binance, right? If you go to Binance, you go to your wallet, all right? You go to your order and you click spot order. So in the spot order here, okay, you can go to order history. Now you can see all the trading that is done by the robot is over here. All right, this is all the trade that is done by the robot automatically. Right now, if you can also go to trade history and you can check all the trade over here that is done by the robot. These are all the real-time trade that has been sell and close. So at this moment, you can see all the 4 trade here is buy. Buy means it is still floating, right? It has not closed yet. If it's closed, I can see here, okay, most of these are already closed. So mainly here we have the buy and so on. So everything, right, is integrated with the Binance. Okay, so every data from Binance will then be synchronized with the robot. All right, so that is the reason why you can see all those information being synchronized. So this is really done professionally, okay? And all this information is real-time information, okay? Close to real-time, instant information that is fed into the robot. This is just awesome, okay? So now, the rest of the features, right? If you go to the home, you have to click the home, then you will be able to see income. So if you want to check the income, okay, that you are earning today, and also you can check the cumulative profit, you can actually check the income. And this transaction 7.3, you can see the detailed buy and sell, okay? So all those buy and sell transaction will be there in detail. And also you have the news, okay? So every time there is information from the company and so on, there'll be a news here. And if you want to look at the announcement, you see at the bottom here, okay? At the bottom here, you will see like an announcement button there. Just click there and you will be able to see all the latest announcement by the company, okay? These are the news by the company and so on. Okay, now let's just quickly go through some of the key takeaways, and then I'm going to run through with you the marketing part of it, and then we're going to end this presentation. So the key takeaways, okay, as you listen to this whole thing right now, if you look into this scenario 1, now this is what we always expecting, right? That the market always going up. Okay, so you can see at the lower, market goes up by 1.1%, higher high, it comes down, higher low, it sells the profit, you earn 1%, and you expect the market to go up at 1.1 and then closes and take the profit. Now, this is the ideal situation. We love this, all right? They will love this, but this can happen when you buy actually at the bottom. Okay, if you buy correctly at the bottom, this can happen. Imagine, okay, every time it goes up, it goes up, it goes up. Every cycle, you make 1%, 1%, 1%, 1% profit for 1 pair. If you have 10 pairs and 10 transactions, just imagine, right? But, okay, when in scenario 2, we will see the market actually goes up and then it comes down, okay? It comes down. So, these are the scenario, all right, that will happen. That is the reason why we have the martingale strategy, whereby the martingale strategy will then help you to manage the market that is actually correcting. So every time there is a correction taking place, there will be an auto replenishment that is actually taking place through the parameter that is done automatically, or you can even do a manual replenishment to actually manipulate the market by your own. So now, as I mentioned earlier, right, wallet management is crucial. So capital is key. Your fund, okay, the fund that you have is the key, right? So the more fund you have, and if you follow the wallet management, you are in control of the market, not the market is control of you, okay? That is the most important thing. So now, first thing, okay, please understand in spot market, ideally is up and down and vice versa. It is driven 80 to 90% by psychology behavioral. So now, please understand, these few weeks, right, the market is down because of the news, because of the bad narrative that has been created around Bitcoin, pertaining to the energy, inefficient, and then we have the story about China reiterating FAT and going against the exchanges and going against the miners and so on. So these are the bad narrative. And what happens? The newbies, okay, the people who are new in this industry, they will sell their crypto holdings. When they sell, what happens? These are all driven by psychology, not technical at all. All right, not technical at all. All is behavioral. Okay, so please understand. So, but nevertheless, in spot market, the market goes down, the market goes up. It's usual. The market goes up, the market comes down. We need to accept this. Okay, the most important thing. Number 2, allow the robot to perform 80 to 90% as determined parameter. Try not to interfere manually. All right. So if you see, all right, because of the wallet management, let the robot do the work, because you still have 50% reserve to play around manually. So don't worry about it, okay? Now, don't waste your bullet. This is your trading fund by frequently performing manual replenishment. Wait for profit percentage to drop between above -20 to below 5% to execute manual replenishment if necessary. Example, at -20% replenishment at $10, if the first order is also $10, the percentage will improve by 50% to -10%, sorry. Now, it is the same, okay, for -5%. The percentage will improve by 50% also, okay, to 2.5%. So you can see, despite the negative, okay, the negative percentage, if you put the same amount, it will still improve by 50%. So why should you do at 2% when you can do it at 10% and improve 50% is much greater than at 5%? Can you see that? So that's why don't waste your bullet, okay? Keep doing manual replenishment. Wait, okay? Wait for the right time. So now, trading spot market is like a war in the battlefield. Wait for the enemy, which is the red army, to lose momentum and the bullets. Thereafter, you go in and ambush the enemy's camp with the excess bullet and walk out victoriously. Can you see that? So money is made in the waiting. All right. So if you are in the battlefield, you wait. Hear the noise of the enemy's enemy's ammunition. Okay. The moment they finish the bullet, you then go in. The enemy will never be able to do anything. Right? You can take control of the whole battlefield. Now, capital is king. The war is tactical, okay, not technical. So don't be too technical. There is no technical analysis here. Some people say you need to study the technical analysis and so on. Bullshit, okay, bullshit. You will never be able, because when the market is driven by psychology, which is by the news and the narrative, the market, big crypto market doesn't respect any technical analysis. And even if you do technical analysis, you cannot predict the future. You can only actually analyze the past performance. And past performance doesn't guarantee future performance. Please understand that. All right? That is very important. Now, 6, the coin selection. So how to do coin selection? These are just simple ideas, okay? Now, as I mentioned to you, please understand in spot trading, you buy low, you sell high. So when the price slide lower, trade or investor will buy back. We call this replenishment, or I call this as averaging. Okay, when come to investors, okay, they will do averaging. Now watch for potential pairs. When coins are just turning green in coin selection list, these are potential uptrend coins, okay, that you may select. So sometimes you look into the coin selection, you see plus 1%, plus 2%. These are coins that are now actually gaining momentum, okay? So you can actually choose those coins. Or you can get into Binance coin ranking list, okay? You will be able to see the top 10 hot coins, top 10 gainers, top 10 losers, and 24-hour volume. So you can actually watch this example, okay? We have the top 10 over here, which are the top 10 coins, and top 10 in terms of the volume. So this can be some sort of guide for you, which coin to actually choose, okay? Now, please understand, nevertheless, okay, there is no guarantees that this coin selected will maintain its performance in 24 hours. Can you see that? That is the reason why you cannot depend on the coin, you cannot depend on the market. You can depend on the martingale strategy, or you can do a manual replenishment to actually ambush the market, even though the market goes down. So at the end of it, right, it comes back to wallet management strategy. Those are critical strategy that you need to adopt, okay, and adapt effectively. Now, take profit ratio. Okay, some people put 1.1%, some people put 1.3%. It doesn't matter. At the end of it, you're still going to take 1% profit, right? Now, when you observe selected coins are turning green, and once it reaches the profit-taking ratio of 1.1% or 1.3, and call back at 0.1 or 0.3, it will automatically trigger to take profit and continue the cycle. Now, if you watch the selected coins are not performing, you may do the following to exit the trade for that coin. What you can do, you can enable cycle to one shot. Okay, means after this cycle, you want to clear this trade. You no longer want to trade that pair any longer. So you put one shot. Now you can do manual replenishment 1 or 2 times greater than the existing current, okay, order amount to bring the average price closer to the current market price. And once it hit 1.1%, Royalq will take the profit and close the trade. Now you then can select to trade other potential uptrending coins. Okay, so refer back to number 3 for more clarity on that. All right, so that's basically the strategy on the taking profit. Now let's quickly get into the what to say. Sorry, I think before we